Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be taking a pair, breaking it down from a technical and order flow perspective, and in doing so, I will provide as much free education as possible. So I really suggest that you stick to the video till the end, and I will see you on the charts. In today's video, I want to speak about EURJPY because at the moment we do have quite interesting price action and structure. Now, starting here from the monthly, what we can see is that the market at the moment is testing a very strong level of previous monthly resistance, which is now turned support and demand here. And as we're testing the level, we have already started rejecting it to the upside. And in a situation like this, we could expect more potential bullish continuation. Since we have also created an impulse and correction, we can measure this correction. And the way in which you measure the correction is taking the Fibonacci from the low to the high of the impulse. And if we do that, we can see how the market retraced exactly to the 50% of the Fibonacci taken on this monthly impulse, which was lining up perfectly with previous monthly resistance turn support, creating a very strong confluence of support at this area that we did expect the market to test and then to start to reject to the upside. So here on the monthly, everything seems very bullish and we could expect more continuation. Now, if we drop down on the weekly time frame, what we can notice is that from a weekly perspective, the market is actually currently facing resistance. In fact, what we had here was the creation of this M pattern. And when the market was around this area, exactly at this low, I made a full breakdown explaining all the reasons for which we could expect this rejection to the upside, which took more than 1 week, and the market created a quite big move to the upside from the moment of that analysis, with more than 300 pips covered to the upside. The reason for which we wanted that move was for the completion of this M pattern, which has now been completed. And the completion zone of an M pattern is in fact a resistance area because it's previous support turned resistance. That is why I say that currently we are testing resistance. And we could expect short-term bearish price action and a rejection away from this resistance. However, as we have seen on the monthly, we would expect a move to the upside for the completion of this impulse correction and impulse pattern to the upside. So immediately we can understand that in order to see that continuation to the upside, we would need to see a weekly break above this resistance, which at that point would be turned support, and at that point would make the monthly and weekly both indicate for a potential move to the upside. Now, if we drop down on the daily, as we have actually already done, we can see how also on the daily this area is very strong resistance, and here we have a daily impulse to the downside followed by this correction. And in general, after a daily impulse, if you want to measure the correction, you have to take your Fibonacci from the high to the low of the impulse. And if we do that, we can see that at the moment we're testing the zone in between the 0.618 and 0.786 taken on this impulse, which are currently in confluence with this previous support and resistance, creating a very strong confluence of resistance that we would expect the market to reject to the downside. So here, immediately by looking at the technical side of monthly, weekly, and daily, it would appear quite clear that if the market here creates a rejection to the downside, at that point we would have a high that the market needs to break in order to continue higher. We don't know if the market will create that break, but if it wants to make the move higher, it needs to do that. Otherwise, the market will simply reject the level and continue lower. So if we actually get a move to the downside and the creation of this high and then a break above that zone, that would actually create a very interesting situation with a high probability of more bullish price action to develop. Because after the break above this resistance, this previous resistance would be turned support. So if the market actually creates that move on the retest of previous resistance turn support, that is where we would have very interesting price action from a technical perspective for a potential move higher. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data for the JPY, we can see how with the last reports, we went from minus 110k net positions all the way up to 42k minus 42K. So we are starting to see an increase in the net positions, but we are still in the negative territory, meaning that we have way more shorts than longs, with 93.1K shorts and only 50K longs. So from an institutional perspective, everyone is still very bearish in the long term for the JPY, but bullish in the short term. Now, a bullish JPY in the short term and bearish JPY in the long term is exactly what we need for this move to happen, because we need short-term strong JPY and then longer-term weak JPY in order for EURJPY to create this rejection to the upside from a long-term perspective, which is also the monthly pattern that we have identified. This is a long-term impulse correction and impulse pattern to the upside. Therefore, if the market will actually print these moves, how we could be approaching this potential rejection to the upside. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move to the upside for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and this kind of things, that is all part of the mentorship program, which you can check out at transparentfxtrading.com. You will see that here you have the possibility to access my entire course, covering also all the rules of the strategies. You also have the possibility to access one-on-one private mentoring with market breakdowns with Telegram signals, the COT data software that we have used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll down past the testimonials, you will see that at the moment I'm running a massive promotion in which you have the possibility to join for only 97 euros. And since I have partnered with the forex broker Blueberry Markets, if you join and open an account with them, you have the possibility to get the refund of the mentorship program price credited in your trading account. So if you scroll down at the bottom, you will see that you have the possibility to join here and gain automatically access with the email and password that you will create during the checkout. So definitely looking forward to have you on board. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you, and I'll see you in my next video.